Hello, everybody. Welcome to another live Sunday Night Live. Appreciate everybody jumping on and being here this Sunday. Hey, how you doing, Alex? How you doing? Happy, I guess I should say belated 4th of July, and to everyone else who had a wonderful July 4th. As always, I'm just going to check this, make sure the sound is okay, and if it's not, then we will change around the audio settings. But let's see how the sound is real quick for anyone who watches it back. Audio settings, but let's see how this. Okay, it sounds okay to me. If anything happens, you guys let me know during the live, but the audio sounds okay on my end. But if anything happens, just let me know if you are tuning in tonight. If you're new to the channel, please don't forget to subscribe to the channel. Also, as always, I tell people, please hit the like button. It helps to not only allow you to see more things in your algorithm that pertains to real estate around these topics or anything that you're looking for, but also it helps to support the channel as well. And if you see a hype button, which usually happens after the video is over, it's a shooting star underneath of it. Don't be shy to click that hype button because it also helps to push us through the algorithm as well and allows you to get more content similar to what you're watching on YouTube. It helps to align your algorithm as such. Again, thank you for joining on this Sunday at 7 p.m. Eastern time. And if you're new here, again, don't forget to subscribe to the channel. And people who have already subscribed, thank you for joining us and welcome back. And we're going to talk about topics tonight as far as new home sales. Prices fell according to Realtor.com. Trump okays the housing bill. So if you guys don't know, a housing bill was passed through the Senate and everybody as far as the numbers that were voted in or voted the bill in per se. And Trump had a certain time he could possibly veto it. However, the bill will still go through. So he says at this point he's okay with the bill. And then we're going to talk about how if you have car debt, how it's actually decreasing your likelihood of being able to get into a home if you're looking to buy a home in the future. So, and as we all know, debt in itself can increase your likeliness of getting a home outside of car debt, student loan debt, so many different forms of debt, right? So if you have any questions tonight, any things around the topics that we're talking about, put them in the chat. And then we'll also kind of go into a little bit too. I'm going to have a video in regard to a short video in regard to a down payment assistance program that is located in Georgia, and talk about a little bit of the insides of it. So let me just check one time about my sound. Sorry, bill was passed through. All right, it sounds okay on mine. So let me know again with the sound. So hey, Alex said, I presume you have access to GMLS. Do you have any experience in using Ditto feature? So yes, I do have access to the GMLS. Ditto, I haven't used Ditto before. So I'm don't really have much experience with it, to be honest, because I don't really use that feature on there. I just go in, I kind of just look in like the tax records, the different things, and I kind of just use like the cloud MLS, different things or whatever, as far as doing comparables and everything for clients. So I don't really interact much with the Ditto feature. So I have to start playing with it now that you mentioned it, but I kind of just stay on the straight and narrow when it comes to me looking at the MLS. A lot of what I like to do in the MLS is just play around what was happening with the data, understanding what's happening in the trends in the local market and different things like that, and those different pockets per se. So I don't really play around with the Ditto feature. But now that you said that, I will explore it a little bit more. Are you playing around with the Ditto feature yourself? Are you experiencing difficulties with it? Just let me know, Alex. All right, so we'll start the show. Or I guess we'll stop the conversation. We're talking about mortgage rates as usual, according to Mortgage News Daily, and we're going to pull it up. So let me just pull it up for you guys. So Mortgage Rate Daily, as you guys can see here, we're just going to touch on the rates real quick as usual. So the 30-year conventional fixes at 6.60, 15-year conventional is at 6.17, the jumbo is at 6.77. The ARM is at 6.33. FHA is at 30-year fixed at 6.17. And VA 30-year is at 6.19. And again, excuse me, this is a national average about mortgage rates. It can definitely change. It could be the same. It can go up. It can go down. It depends on your your own criteria, your own debt to income ratio, different layers that add on as far as how they create your rate. Also, if you guys know, we look at the 10-year. As you can see up here, it went up. It's at 4.486 now. So the 10-year treasury helps to kind of facilitate which way the mortgage rates will kind of go based off of the mortgage, the bond market, basically mortgage bond securities, and it kind of tracks everything. So we will exit off of this real quick, and then we'll get into the articles. Alex said, not a realtor. Okay. He said, but would like to push MLS to local MLS, push GMLS to local participant. Okay, so you have to, I don't know who you're using as your realtor. I think I remember on Jen's Live, you said you kind of went on the track of a transactional realtor and going forward as far as placing your property on the market. So I'm not sure, does that particular realtor that you're utilizing, their company, do they have access to that local MLS? Because it is always, like you said, to kind of push your listing on that local MLS in your area. Because even though if people are using Zillow, typically if they're searching within a certain area, it'll pull up every house or property listed on the market that's in that area, no matter what MLS is in. However, if you want to kind of target more of the realtors that have clients in that area, you do want to kind of get into that MLS. But typically Zillow will pull up every MLS in that area as far as when people put that area in Zillow. And so if you guys don't know, as a tip, when it comes to your houses being on the market, if there's someone looking at a house in your area via Zillow, Realtor.com, these different entities that pull up these houses, if they start looking at one or two houses in that area, Zillow or Realtor will automatically create an algorithm for them that almost all their houses in the area, when it starts to push those listings, they'll start to come to their phone or however they're saving it, and they'll start to really just get everything in that area. So yeah, he said not, but they have access to GM. Okay, so you might have to. He says transaction broker has access to GMS. Okay, so you might have to find a. I don't know if they're local to you, this particular transaction broker, but you might have to find a more local brokerage that has access to that particular local MLS that's still transaction. If you want to get on that particular MLS in your area, because I know sometimes, like you say, some of these transaction brokers may not be located in your area or in your state. Because I know a lot of people, even in the Metro Atlanta area, they'll use transaction brokers based out of Florida, right? And then they'll just put them on certain MLSs because that's all they have access to. So some MLSs, if they're not in the state of Georgia, they're only paying for certain MLSs as far as having, because you have to pay to get into these MLSs. As a brokerage, you pay to be a part of the MLS, and then an MLS in turn allows your realtors that are underneath you, your licensed agents, whatever, they can then get into those MLSs. So that transactional broker may only be paying for the GMLS. So you might have to find a more local transaction brokerage in your area that is with that MLS. Because yeah, that's what happens in the Metro Atlanta area as well, where we'll see a lot of, let's say, it'll be some transaction brokerages that are based out of Florida, not in Georgia, and they're only paying for the GMLS or the FMLS or the Central MLS. So yes, you might have to find a more a transaction brokerage local to your area that is willing to be able to have that. Hey, David, how you doing? Again, happy belated 4th of July to everyone. And we're going to get into the topics because I know everybody's like, well, what happened to the topics? Alex says, as you know, GMLS covers all 159 counties. GMLS definitely does. Covers all the counties in Georgia. But every agent does not put all their listings in every MLS. So I have a client that I'm working with right now in Warner Robins. I love her to death. I've worked with her a couple times, but and I don't live in Warner Robins, of course. I live closer to Metro Atlanta. I'm in Cobb County. She lives in Bibb County, which is Macon. Well, lives in Houston County, right below Bibb County in Macon. So when we go to look for properties in her area, what happens is that some of those agents put the properties in like the middle of Georgia MLS, or they'll put it in the central Georgia MLS. And so I don't have access to get into the central Georgia MLS. So what I have to do is I have to then in turn call that agent to say, hey, my client, we want to see a property. I don't have the back end access to that because my brokerage hasn't bought into that MLS. So in order for me to get that information, I have to call that agent directly. The good thing about it is that in Georgia, we have the Supra, which allows us access to like those lock boxes in that area. However, I don't have that back data. However, when it comes to that middle of the MLS, which is the middle of Georgia MLS, I have access through the FMLS because the FMLS has access to certain databases. So I'll pull that up in the middle of this live so you can kind of see what I'm talking about, Alex, as far as that. So I don't know. And I don't know what your MLS down there in the south part of Georgia is called, because like you said, we have 159 counties. However, we have it's about 59 MLSs, I think 59 MLSs in the state of Georgia. I forget. Don't take my word by that, but I think it's 59 MLSs in the state of Georgia. But all right, let's kind of jump into this. So let's talk about the new home sales kind of dropping, as you guys know. And I'm pretty sure you might have been told this, and maybe your realtor is telling you this as well. If you're currently trying to buy a house, they're saying the new homes, if you're looking to get a new construction home, you can kind of go in and try to get some, and they're kind of giving away like closing cost incentives. They're kind of giving away buy downs or fixed interest mortgage interest rates, right? You're seeing some new constructions depending on where you live at. If they're building them around you and they have a lot available, you're seeing a plethora of new construction home sites where they'll be like, oh, a 3.99 interest rate or a 4.99 fixed interest rate for a 30-year fix. Or you're seeing those type of incentives like $20,000 in closing costs, right? Or maybe a 1-year HOA fee. So recently they had reported, Lennar and all these other new home builders have said that they've taken a dive as far as sales falling. But in sales falling can mean numerous things, right? It can mean things as far as the price of the house had to come down and soften, but it also can mean that we're seeing a decline in sales because we're offering so many incentives to the sale because we don't want to drop that home price down. So let's take a listen. Let's read about this a little bit. Let me know your thoughts, your feelings. If somebody has purchased a new construction home, I know what I'm hearing a lot from people recently, depending on where their homes is at and with the community, how the community was built out. Some people are not having a great experience with their new construction homes. But let me know if that's something that you're even looking at right now, and let me know your thoughts. So it says, resilient new home segment takes a hit as sales fall. It says May data shows new home sales fell 7.3% month over month, 6.8% year over year, as affordability concerns and economic uncertainty weighed on consumers. So as we all know, we are seeing a very tight squeeze of who can purchase homes. There is an affordability type of I don't want to keep saying crisis, but there an affordability demand, I should say, as far as people who still want to purchase homes. Because again, everybody is not in the business to want to buy a home, but those who want to buy a home, they're saying, I would like to take this journey to be a homeowner, maybe to have a stabilization for my children, for my family. However, it's just unaffordable to do so at the moment. So it's an affordability demand that's kind of squeezing people tight. It says, while existing homes showed signs of increased sales activity, so the resale homes have shown an increase of sales activity last month, the same cannot be said for newly constructed dwellings. New home sales fell, prices rise. Sales of new homes for May came in at a seasonally adjusted annual rate of 580,000 according to the U.S. Census Bureau. That's down 7.3% compared to April and down 6.8% from May 2025, when the rate was at 622,000. Last month's new home sales were also well below the median forecast pace of 632,000. So again, this is nationally. So you'll find some states and some areas where you might see more new construction homes, right? So in the state of Georgia, where I'm at, there's a lot of new construction. Every time I turn a corner, I'm seeing another plot of land being graded. trees being cut down, cement being poured, because there's just so many new construction homes being built down here. But then you'll go to certain areas where you might see a few of them, right? So let me know your thoughts. So what's happening in your area? Are you seeing a lot of new construction homes? Are you seeing them sitting longer? It says May slow down, push new home inventory up 10.3 months, 10.8% higher than April. It also led to a rise in sales prices. So again, you guys know that when it comes to housing data, we lack the as far as where we're at with the data. So even though we're in July now, we're lacking the data as far as when they put it up. So by the time we come to August, we'll probably see data from like July, right? Not because of a stronger demand, but because builders are relying on higher dollar transactions, according to Joel, senior economist at Realtor.com. The median sales price for a new home climbed to $424,900 in May, according to the Census Bureau data, up 2% from April. So they're saying the median sales price of homes still continues to climb, even though new construction is seeing a decline. And again, we got to remember that just because we see an incline in median sales prices, it's not because we're getting a bunch of people buying homes. It could be more because we have, as they've been saying in recent news reports and having conversations, they said it's starting to create a K-shaped economy where we're getting more people who have the money. They're the ones actually transacting right now, right? We're getting more of that a wealthier class of people per se being the ones creating the transactions. We're seeing more people who can afford that, so they're buying higher price homes, which is kind of funny, right? Because what's happening is that we might see some affordable homes per se placed on the market, but what I'm seeing as far as my area, we'll see affordable homes placed on the market and different factors, right? We might see an affordable home placed in Atlanta, let's say the Atlanta area, and it might pop up at 150. You're like, oh my God, 150. However, you go see the home, it needs a lot of work. It needs a lot of repair. It needs to be fixed and flipped. It needs a renovation and might need a new foundation, different things. So it's really not moving ready, nor will any like loans like a USDA loan or possibly not an FHA loan unless you get a 201k FHA loan, which is that renovation loan that could possibly do those repairs. But typically we're not seeing those particular people qualify for such, right? And so what that leaves is cash, conventional hard money loans, X, Y, and Z. And so it's not reasonable for a first-time home buyer sometimes to get into those homes. And then you might see another thing of like, oh, well, maybe jump into the condo market, right? You're seeing lower condos in the city now, and that might be like under 200,000, maybe 250. And they're like, wow, maybe this is an option to get in. But then you're seeing these high HOAs. So it becomes harder for people to kind of get in at that lower level. So what I'm seeing now is I'm seeing more of these second-time home buyers or third-time home buyers, or maybe people who are higher as far as when it comes to how much they get paid. They're kind of going in at like 800, 900 million dollar price point houses, which I'm like, wow, this is crazy. But that's where people are jumping in now at. So now you're seeing the medium price of a home rise when it comes to that, or even the average as far as the price, it is rising. So people are like, well, what's going on? I thought home prices are, either deflating, or maybe they're adjusting, or they're correcting. But meanwhile, you keep hearing the news state that we're seeing an appreciation. So it just depends. And it just depends where you're at, and then two, who's buying the homes where you're at. So, yeah, Alex said, in Florida, I have an in-law with fairly new Lennar home with defective workmanship, specifically the floor. Therefore, Lennar needs money to go back and fix previously built homes. Yeah, and that's what I'm hearing. I'm hearing some people and their experience with some of these new constructions that are being built now, that they're not building them very well. Like a lot of them are, they plopping them up. Of course, they are spec homes, which means that they're built to particular layouts, right? You can't come in really nowadays and kind of customly build these homes unless you find a custom builder. You still have some smaller local builders that'll build custom homes. But what I'm seeing right now, if they're doing that, they're basically saying, okay, we bought the land, and if you want us to build this custom home on this land, you got to buy this from us before we build it. So that's what I'm seeing in my area. I don't know if that's what you guys are seeing when it comes to those custom builds. But excuse me. Yeah. So I'm hearing a lot of that as far as these new constructions, that builders need to use more smoke and mirrors, rate buy down anyone. Yeah, the rate. So I'm not a fan of a rate buy down, but I tell people, if you do rate buy downs, like you said, they're using this smoke, they're using smoke and mirrors, right? I tell people, if you're using a buy down, you got to make it make sense, right? You can't just go in there and get a rate buy down, because you need to understand, can I afford this mortgage come the third year, the fourth year, or the second year per se, after this rate buy down increases? Can I afford this mortgage at this amount come this year? If you cannot afford the mortgage, and two, when it comes to builders, this rate buy down is not factoring in how much your current cost of your property taxes will be. Because if you guys don't know, your property taxes is based, when you go to the builder, most times those property taxes are based off the land. In order sometimes for those taxes to get reassessed, typically with builders, is that they have to submit that CO, which is a certificate of occupancy, basically stating that the property is ready to, like, go down to the county, get the CO, it's ready to go, and then they can kind of, start to tax upon the structure on the land. So you got to just make sure those small little things, of course, your home insurance, different stuff. So you got to be very careful with the rate buy downs. You got to understand what you're doing with it. Can you afford it going forward? When your property taxes increase, possibly your HOA will increase, because people don't realize that too. When a new construction community is being built, your HOA will increase, because the more houses that they build, your HOA is going to go up, because it has to take care of that community at a larger scale, right? So if you start, let's say your HOA in that community start at $50, but then by the time they finish all the phases, there is at $150, right? So you just got to really just understand it. I'm not saying don't buy a new build, because there's always, people love newer things. We love shiny objects. However, I'm saying just understand it fully if you're going to go that route, and just know what you're getting into. Okay, that's all. David said, it will be interesting to see the stats this year. For example, the median age for the first-time home buyer. Yes, it would be interesting, David. I can't wait to see it, even though we know last year it kept increasing. And, generally we found people in their 20s back in the day that were first-time home buyers. Buying was a 26, I believe, at one time. Before that, I think it was like 21. And then it's going up. Now we're in our 30, 38, 39. We're in our 40s. And it's so funny, because when I look into that statistic, of course, seeing people buying their homes for the first time, I am seeing more people kind of in their 40s, late 30s, and early 40s. But then I'm seeing the other side too, where I'm like, in 3 to 4 years, these people are trying to exit out of the house too. So it's kind of interesting, but I can't wait to kind of see that stat as well. It says the new home market is firmly in buyer's market territory and moving even further that way. It says housing market caught between competing forces. May sluggish sales pace adds to increasingly bleak picture for new homes, with housing starts recently dropping 15.4% month over month, and builder sentiment continuing to hold below 40 on the National Association of Home Builders monthly survey, a trend that began 14 months ago. Yeah, so the National Association of Home Builders, their sentiment has been down for about 14 months, as far as the sluggish movement of these homes, because a lot of them got into it because, we saw the pandemic happening. And I don't know why people assume that great things last forever. We all know what goes up must come down, and we don't want to say nothing great will last forever. We got to make sure we can sustain it so it can last forever. However, to overinflate and think that will be the trend happening is not going to be, it's not reasonable, I should say, because again, as I always state, everyone is not going to be a millionaire, and everyone's not going to make six figures. There's but so many jobs. We know that the tech industry is laying people off and everything, right? And now we're seeing people now like, okay, I think I'm gonna get into the trades, because we can make six figures in the trades as well. But everybody is not going to want to do that. Everybody has their own path as far as what they want to take or what they want to do in life, and all those paths does not lead to six-figure jobs. You have people who want to be teachers. Depending on where you live at, you're never going to reach six figures as a kindergarten teacher. So, and that's okay, because that's the path that person wants to take in order to fulfill themselves, fulfill what they want to do ultimately, and live and play out their life accordingly. But because of that, they might not ever have the opportunity, unless possibly they get married, or depending on where they're located at, to be able to purchase a home. So that's the only thing I take when it says, when people feel like, I want to keep creating this massive equity in my house, and I want, things to keep riding up the wave up. At the end of the day, no, everybody's not going to be able to afford $1 million house in the future. So I just tell people, we got to be understanding of home appreciation. And then also we hear like this catch-22 sentiment, where people feel like I want so much equity on my house, but at the same time, I don't want my property taxes to go up. Again, that's a whole nother subject for another time. But that's kind of like with the gotcha, right? You want appreciation in order to be able to sell and get something out of your house because you feel like you lived in it for a long time, you fix things up accordingly, and you want to sell at a decent price that makes sense, which I understand. But at the same token, we have a catch-22 where people are like, well, I don't want my property taxes to go up. So, it's always going to be a gotcha somewhere. So it says, taken together, the May new home sales report and June builder sentiment survey suggests that the housing market remains caught between strong underlying demand and near-term affordability constraints. The demographic tailwinds and years of underbuilding continue to support the need for housing, Cushy added, but elevated mortgage rates and economic uncertainty remain significant obstacles to turning that demand into homes. And again, they keep, stating in regards to underbuilding again, and to what forms of underbuilding and where are we at underbuilding, because that is local to your market in real estate. Because like I said, where I'm at, there's no underbuilding. We're overly building from single family homes to multi units as far as apartment buildings. We have so many empty units down here as far as apartment buildings. They're giving away 3 to 4 months of rent. They're like, hey, come and live here for a whole year for free. And we have single family homes, and now we even have these large corporate investors who are becoming net sellers or liquidating their properties down in the metro Atlanta area, and they're shifting into new single family home rental communities. So now I just went last week and saw this whole other new rental single family home community, 3-bedroom, 4-bedroom single family homes, and they're going for like $2,600, $2,700 a month. And so that's where things are shifting, right? So according to underbuilding, it depends on where you're at, the city that you're in, because where I'm at, there's no underbuilding. When it comes to the elevated mortgage rates, like I tell people, and I had this conversation the other day with a gentleman I was talking to, because I actually went, I don't know if he's on here, but my client invited me to his barbecue yesterday for 4th of July. So I went to his barbecue, wonderful food, I should say, from his family. And one of his friends was there, and his friend wants to purchase as well in the future. And he basically said to me, I had to kind of explain about the mortgage rates, because 6%, like we talk about all the time when we have a conversation about this, is really not high when it comes to the purchasing of a house with a mortgage rate, right? It's high now because the houses are unaffordable. The home prices have spent up so much that the mortgage rate is too heavy on that home price. However, if we look back historically, when it comes to housing, that 5 to 7% mortgage rate was historically a good thing back in, like, say, the early 90s or the 80s or the 70s, right? Because like I say, I always tell you guys, when my mom purchased her house in the 90s, her mortgage rate was about 9% and things like that, right? But and then as I said, as we go through time, we went through the historically great financial crash situation. And because what happened is, like, I think I showed the chart on here before, but basically what happened is that we saw the interest rates went up and then they started to drop, right? And as they dropped, people were able to start buying homes, which created home appreciation. A home appreciation because people say, okay, the house is cheaper to get a house now, because at the time it might have been like, say, $80,000. Maybe your mortgage rate at that time, as it started dropping, was about, the rate started dropping, the housing prices were low. So let's say it was about like 6%, $80,000, $100,000. So because of that, it started to increase the home pricing because the rates were lower. The affordability of a house wasn't that expensive yet. So it made more sense for more people to purchase at that time, because they're like, well, the mortgage is cheaper than the rent, or the rent and the mortgage is the same, and I can create equity, and I can be able to, pass this on to my children. I can't pass an apartment on to my children, and different things like that. When typically you'll see more, and I guess that's why single women or buy more real estate, because they typically buy it in the sense of a family, right? They're like, I want my children to be able to have something if I should pass on, and I don't want to leave them struggling, especially my younger children. So they'll buy real estate, they'll set up life insurance policies to protect the house when they pass away, so they can pay off that mortgage. Because my mom did the same thing. My mom, of course, she's still alive, but when she bought her house and she no longer has a house, she decided to sell it, and she decided as she got older that she just wanted to live in an apartment and rent, and that's okay, that's her choice. But she put in place a mortgage policy, life insurance policy, to pay off the rest of that mortgage if something should happen to her while the house was still, under a mortgage. And typically we'll see more women kind of do that outside of men. I'm not saying men don't do it either, but more women will kind of take that route to create that home right there for their children, that solid foundation, that base. And because of that, when it comes to the prices, again, we saw those mortgage rates being there, home prices being a little bit leveled off at that point, and it started to rise, right? Home prices started to rise because it was cheaper per se rates. And then we saw the great financial crash happen, and then they had to soften those rates again, and they went all the way down. It's come by like 2012, 2013, it kind of flew into like the 3 to 4% interest rates, and it stayed there all the way to like 2019. And that's why home prices kept climbing and climbing, because it became affordable, right? With the rates being lower, and then pandemic hit, and then the home prices just shot off 2%, boop, and everybody just went up. So now we're getting back to historically where we were at for a long period in time, that 6%, 7% rate. But because home prices are so high, people are like, this is crazy. And they're all wishing to go back down to 2%, all that rate. And I'm like, we don't really want to go back to 2%. Because if we do it, we might see a push again with higher home prices. I don't know. I don't have a crystal ball. Maybe we go to 2% and home prices don't move no more, right? I don't know. But what do you say? History repeats itself in different ways, in different forms. We always see a repetitive factor somewhere. And as we all know, the housing market is very cyclical, right? So David said true. So I think you were saying true as far as the building. But yeah, let me keep going. Sorry, because I'll get on a whole tangent about that. The latest data reflects a significant turnaround for the industry, which had shown solid new home sales and sluggish existing sales for the past year. Cushy added, while pending sales for existing homes were up 4.8% year over year in May, it's unclear whether that trend will be sustainable. May's new home sales pace also fell below the average level record during the 5 years preceding the pandemic. Cushy noted, adding that this indicates that even the housing market's more resilient segment is slowing. So basically saying the new construction part is starting to slow down, right? They always feel like that's the most resilient part because builders can kind of push it, giving you those incentives and everything. And at one point, we know new construction had always been higher than resale, right? And now we're in the sense where new construction is lower than resale homes. And my thing about the resale being higher than the new construction, and I could be off this based off my opinion, I say a lot of it is because you have people that are trying to sell, and if they recently just bought, they're trying to get out of a home they recently just bought, so they have to price it higher than what they bought it for. And then, of course, you have the neighbors next door that might have lived in the house for so many years. They're like, oh, well, I want the same equity that my next door neighbor got, even if they got it in 2020, right? So we're seeing these resales be higher, even though some people don't put no work and effort into anything. And I had this conversation with a possible client the other day in regard to them trying to sell a house and with no work being done to the house, and they want to sell it for market value. And I said, oh, I don't place people's houses on the market for market value. So if that's what you guys want to do, use me as a realtor to help you place your house on the market for market value with no repairs, no renovations or anything done to it, without adjusting it according to homes that sold that are similar because of the same, the same comparity. I don't know if that's a word. No, probably not. But the same comparable looking type of thing. I'm not the realtor for you, and it's okay. We can, to go to another realtor. I will not steer you wrong or promise you something that I cannot deliver for you. Okay. Late year improvement impossible. It says the market has likely hit the bottom for new home sales, according to the Oxford Economics-led economist Nancy von Hunten, who doesn't think that the latest data is a sign of the most sustained decline. So that is them talking about the new home sales. We'll go back to Mortgage Daily real quick, and we'll just look at what they were saying. And we'll look at this real quick as far as the sales too. Let me know your thoughts, your feelings as far as what's going on with the housing. How you guys feeling when it comes to the housing and different things like that? I know it can be very, very it can be very depressing when you're somebody that's trying to buy a home and you've been, struggling to get to that goal post, and you're seeing so many different things happening right now. You saw a period where home prices were rapidly going at a quick pace because of the mortgage rates being so low due to the feds dropping that, dropping the rates, but also that bond market kind of trending down. And then you turn around and now we're in a market where things, you would feel like things are adjusting, things are correcting, and it's like, okay, how do I get in and purchase a house? But then you got people that are sellers that still want what they want for their house, right? So it can be very hard to try to figure out, where do I fit it into this puzzle? Where I wanted to see. So let me know your thoughts, how you guys are feeling. I'm sorry, I was trying to pull up this thing and I lost it. Give me 1 second. Is this it right here? You got me saying, Laura. Oh no, that's not the one. So yeah, but let me know your thoughts, and then we'll jump into the whole thing in regards to car notes are now messing up. Why am I not seeing what I'm trying to get? Car notes are not now messing up your possibility, which that always does, messes up your possibility as far as trying to purchase a home. And you know what? I'm not gonna be able to find this other thing. I was trying to find this other thing about new home sales to kind of, you can see the shift in it, but I don't know why I had it on here, but now I can't find it. So I don't want to keep us just sitting here trying to figure stuff out. So we're just gonna keep it moving. Alex said, what is your opinion on Form 104, non-exclusive sellers engagement form? To be honest, I don't really have an opinion in regards to that particular form. So I'm guessing, is that a form that you might have signed because you're with a transaction brokerage? Basically saying that you're this is what I'm pulling. So, if you don't want to have exclusivity to a particular, brokerage, it's up to you, right? It's a form, it's something that you as a person, right? At the end of the day, when it comes to real estate, it's your house when you're selling it, and it's your house when you're buying, well, your house when you're trying to buy it. So yeah, so it's up to you. If you don't want to have that attachment to the brokerage, and you don't want to be exclusive to one broker, and you want to be able to, explore, why not? Hey, what's going on, Dad? Does your broker allow? So we have it inside our forms. Our brokerage tends they want us to sign an exclusive one, but at the end of the day, they don't stop us or prohibit us from signing one. So, sorry. So yeah, but they want you to get the exclusive one because they, of course, at the end of the day, when it comes to a brokerage, right, a brokerage makes a piece of our money as a realtor. So when we close a deal, that check has the brokerage name on it, and it goes directly to the brokerage before it comes to the realtor. So we get the last piece of the pie of that check. So at the end of the day, the brokerage always wants a realtor to sign an exclusive seller's agreement, because they're like, we know exclusively we're going to get paid. The brokerage is going to get paid, right? So they don't want realtors to typically sign a non-exclusive. However, they don't push against it. Well, my last brokerage did. I'm gonna be honest. My last brokerage did. I switched to my brokerages now, though. My last brokerage did go against it, and we would get in trouble if we did not have it signed. Like, we couldn't even market it in the MLS, because they were like, oh, we didn't have that agreement. They wouldn't even allow us to put it in the MLS and then be able to use the IDX platform technology to kind of shift it to Zillow and all those platforms. So last brokerage did. This new brokerage I'm with, I don't think they really mind it. But again, when it comes to real estate, the brokerage makes more money than the realtor because they have so many realtors underneath of them, and they get so much of a checks percentages from us, 30%. I think I say this on one of my videos. My last brokerage I was with, they were taking 40% of my check from me. 46% of my check from me. So it was a 40% fee, commission split, and then it was a 6% franchise fee. So it was 46%, and then I would have to take money out for taxes too. So by the time I took home a check, it was really no money, to be honest. And I kind of broke that down in the video that I did as far as like my commission check, because like I said, I like to be transparent with people, so I just broke it down. But it depends on where you're at, right? Every brokerage is different. You have transaction brokerages that are flat fees. You have commission-based brokerages that are percentages. So it just depends where you go. GAR has a form of 104. I think that's the non-exclusive. Most realtors will not talk about it. Wonder if non-exclusive might increase business. It could possibly increase business, being able to give people that flexibility to be able to move how they want to move without feeling that they're attached to something. But yeah, most realtors won't talk about it because, like I said, the brokerage typically wants the realtor to sign an exclusive one with the client. No pay without a sale. Hey, yeah, if you don't sell, like you said, why get paid for it? I don't know if you guys can hear it. It just started raining crazy. Form 104 is signed but not allowed, but allows non-exclusivity. Okay. So you say you signed it, but it allows you not, you're not exclusive to that particular brokerage. All right, let's go into, because I can't find that thing. And I do want to talk a little about, I'm not in New York, but I want to talk a little bit about the guy, Kenny Burgos in New York, and a topic that he was talking about as far as the rent freeze. So let me know if you guys are in New York and how you feel. And I also, Alex, I'm going to pull up that thing in the FMLS so you can see the MLSs that we have access to if the brokerage that you're working with, the transaction brokerage, if they are a part of the FMLS. But I don't know if you, because again, I don't know what MLS you're a part of. I don't think we have that MLS attached to our FMLS database. But we have, you know, like I said, we have the middle of Georgia. So if some things will pop up down in that middle of Georgia area, like Macon, Macon, Warner Robins, Perry, something like that, we would, the client that I'm working with now, we would, I could pull up that back end of data. All right. So if you guys are possibly trying to buy a house and you have car payment, you know, it says the average new car payment is shrinking home buyers' budgets by $135,000. And so I also made a video about this too, as well. Not as far as the car payment shrinking your housing affordability or your power per se. However, I made a thing as far as what the medium home price should kind of be and how you can, as a home buyer, figure out how much you make a year, take that net amount. They tell you take the gross times it by 2.5%, 3%, or 2.5, 3, or 3.5. So basically, just think of it almost if you're trying to get to an apartment. Typically, most apartment complexes say you need 3 times the monthly to afford this rent. 3 times income before the monthly rent. Take the same type of comparable when buying a house. If you make $50,000 a year, again, I say shrink it down to your net. Let's just say $45,000 a year times that by 3. That's about what, like $135,000. I don't know. I'm just doing rough math. As far as what you might get approved for, as far as the loan, a house loan, home loan, I already said, and then also shrink it lower than that because you never want to buy at the top of your budget. And so you kind of want to, you know, play around with that to see your affordability. But if you do that, if you time it by the average medium income in your area, say like the average medium income in your area is 80,000, as far as what they're saying, times that by 3, that'll tell you how much the average medium home should be in your area. It was like $200 and something thousand should be the max as far as what homes should be going for in your area. And as we all know, homes are going for $400,000, you know, $300,000, $500,000. So it's above the average median income in multiple areas. And what's happening now is that lenders are approving, which is not really great. They're approving people above that limit, that DTI ratio spectrum, where it should be like 30% and below. Really, now everybody's at like 45%, 50% of their debt to income ratio, which is not really good because it leaves you kind of, I guess, kind of like open wide for failure sometimes, because if something bad should happen, and we know life happens, things occur. Like just recently this week, I was helping a client see, go look at houses. And as I'm driving down the highway, a truck runs over a tire. And I just got in my car, y'all. I don't know what's going on, but I think because I drive so much with real estate that I'm actually going to take a break for a little bit, to be honest, because I just drive almost every day. Well, every day for real. And so I got to take a moment because I'm jacking my car up now. And so basically what happened is a truck jumped in front of me, didn't know it was a tire there. They ran over a tire. The tire flipped up in the air, flipped down. I couldn't avoid it because I couldn't get over in the other lane because there was cars over there. So I ran over the tire. It literally cracked and pulled my bumper off my car. So I have a whole crack of my car with the bumper missing. And then it was a Tesla behind me. They couldn't avoid it either. So they ran over it too. So I'm like, yeah. So at this point, I'm like, I'm just like, I don't know what's going on. Alex said, hey, what's the problem? You can live in your car, right? Hey, yes, you definitely can live in your car. You can live in an RV. You can live in a station wagon. You can live in a camper. You know, what is the problem? And of course, it started raining. So my daggone internet is messing up. So guys, forgive me if my internet is going crazy because the rain just started. And I guess it must have hit a daggone thing. It probably hit a daggone tower. So hopefully you guys stick around. I know I'm going to be going in and out now because of this rain and the thunderstorm happening. So if not, watch us on the replay. And, let us know your thoughts below. It says the typical new car payment hit an all-time high in the first quarter of 2026. New data shows a jump that cost. What I'm going to do is, because now my internet is acting crazy, so I'm going to take some of these slides off that I'm not using, because now the rain started and my internet's going crazy. It says a jump that could cost hopeful house hunters as much as $135,000 in buying power. The average monthly payment on a new vehicle is $770 a month for a car. That's crazy. Up nearly 3%. Let me take this one off. Let me take that off so I can give my thing some more power, because it's rain. Of course, it's messed up. Let's go down here. It says from a year earlier, according to Experian, the increase follows a sharp run-up in both vehicle prices, which we all know prices of a car has gone up. Even what is it called? What's those called? Used cars. Now even used cars are dagging near $30,000-$40,000, which is crazy. It's kind of winning trend as far as houses. Everybody, when I sit down with people, they're like, people want to sell their houses for so much. This is a used house, So new cars prices are almost 30% higher than they were in 2020, while auto loan rates hit more than 7.5% in February 2026, compared with about 4.5% early 2022. For a medium income household, those added costs can mean the difference between shopping for a $530,000 home and a $394,000 home. A 26% reduction in home buying power, assuming a standard mortgage scenario and a down payment of 10%. Auto debt is already the second largest category of household debt after mortgages, but now those rising payments are competing more directly with housing costs as the moment buyers are trying to qualify for a loan. And I don't know if you guys noticed, but sometimes if you're trying to qualify for a loan, your lender might say, don't go out and purchase anything. Don't purchase anything. Don't do anything. And of course, what ends up happening typically with most people is that they end up turning around purchasing a car, because what always happens as you're going through life, things occur, right? And most times the things that occur are car situations. Like I told you with my car situation, even though I'm not purchasing another car, I'm just not doing it. So God, you got to get me through this. You got to get me through. I had paid off my last car. And I think because I drove so much as far as, helping people in real estate, driving to see houses so much and driving a lot out of my area, because most of my clients are not really in my area. Most of them go south, go east, go north. And I know my areas are more, very unaffordable to purchase. So most people kind of go further out. Typically, if I'm in my area, I'm servicing more people in like Marietta part of my area, or like Powder Springs or Mableton, more of like that more affordable area per se. But and where I currently live at is so unaffordable that most people I talk to, they're like, I can't buy where you live at. And I'm not saying I live in, these expensive houses, because I don't, but most people can't. So I'm always into myself. Like I'm south of the airport in Henry County, Clayton County. I'm east in like Newton County, Rockdale County, or I'm always, as I told you guys, I have a client right now down in Houston County, Bibb County, or, I got to kind of go other areas because there's more affordability for people. And, because most people don't want to really buy even in Fulton County, which is inside, kind of getting some parts of Atlanta, because they're like, I don't want to buy here because these houses are expensive, or the houses that are affordable, or the condos, HOAs are too high, or the houses that are affordable in their budget, they're like not in the best areas, or maybe you go there and the daggone floor is leaning to the left and we're walking on a sideways slope. So yeah, but needless to say, it says vehicles are getting so expensive and pushing down that buying power. Says Michael, a real estate agent in Michigan. He said, adding that he's seen car costs push buyers into neighborhoods they would not otherwise consider out of the market entirely. And some buyers nowadays, they want to be in certain areas, right? Some people are like, I don't want to go further out no more. Like, I don't want to move an hour away and then come back and drive to my job. So some people are like, I just rather just stay in this area and I'll just rent, because what's the point? I don't want to sacrifice a convenience as far as me being close to my job, close to my children's school, or different things like that, just to buy a house to go further out. So most people are just saying, hey, we'll just wait. We'll sit and we'll wait, see if something happens. Maybe affordability will pop up on the scene. We don't know which way it's going to lean, right? So people are just like, hey, I'll just sit it out. It says you're getting pushed to stamp lots that you don't like in neighborhoods and you don't enjoy with a home that doesn't have the amenities that you need, he says. As home prices and mortgage rates remain high and other forms of household debt keep weighing on buyers' budgets, the calculation is becoming harder to ignore. Says car payments impact mortgage approval. The measure that puts auto debt and housing debt in direct competition is the debt to income ratio, which we stated earlier. Lenders use it to compare a borrower's recurring monthly debt payments, with their gross monthly income when deciding how much mortgage they can afford. The exact threshold varies by lender and loan program, but 43% is a common benchmark for total monthly debt. I don't agree to the 43%, but I understand where we're at now in these times that's where most people are at when it comes to their debt to income ratio. It's 43%. I'm a person, as you guys probably know me from just talking every time we jump on here, have these conversations. I'm a person that I want to get rid of debt. I'm not a person that likes debt. I have debt right now. Of course, you guys know I had to get a new car. So I have a car that I had paid off before. I didn't have that in my debt. And I use a program. Well, I think I mentioned this before, and we had her on the live. It's called Operation Hope. It's a local nonprofit in the Metro Atlanta area, and also throughout Georgia itself and other states as well. They're in New York, they're in other Florida, they're in every state. They started in Georgia though, and they have like financial coaching sessions that are totally free. And I jumped on there with a financial coach before I had her on this live named Jamelia, and we sat down and looked at like my budget, right? Because I don't want to be in debt. That's not my goal in life. And so we sat down, and literally at that time, my debt was really no debt. I just had my student loan debt, and I had my credit cards. I have 2 credit cards, and that was all. And she was like, do you pay for like apps? Do you do this, do that? I said, I don't pay for no apps. I don't do all that stuff. I just don't want to put myself in debt. I got rid of my gym memberships. I got rid of all these things. So I was like, I could just go outside to the gym. I can do this, whatever. I don't want frivolous stuff just to have frivolous stuff. And so at that time, she was like, well, I don't think we need to have so many conversations because you don't have a compelling amount of debt. Your credit score is not bad. Your debt buckets are not bad. The amount you need to pay on your credit cards is not bad that you need to pay off, because it's not like a crazy amount of debt on my credit cards. And then she was like, and at the time I have a car note. Now I have a car note. My car note is, I guess people feel like it's low because my car note was like $200, $220 a month. Before that, my last car note was on like $137. I'm telling you all my business. But and I know most people, as they're saying in this article, their car note is like $700 something a month. But it's just like, I just don't want a large lump sum of debt. Yes, I have student loan debt that will be paid off. But I just don't want that amount of debt. That's why even when people are purchasing houses, when I'm talking to them, I ask them about their finances and say, are you okay? Are you able to, pay this off? Are you going to be okay? Because at the end of the day, I don't want nobody to have debt, and I can't tell you what to do. I'm not your parent, I'm not your lover. But at the end of the day, I ultimately don't want nobody to suffer in debt, because I know that can be very stressful. It can create anxiety. So, my goal, even though I'm in real estate, and of course I want people to create home ownership, especially if you have children, you have a family, to give them something to secure them as going forward in the future if something should happen to you. But at the end of the day, I'm like, I don't want you to live in revolving debt either, and feel like you can't get rid of it or get up from underneath of it. It says that's how much you can allot toward all of your revolving debt, which would include your mortgage, your car payment, credit card payment, and then any student loans. Says all of that debt has to fit within the number. So they're saying all of that has to fit within that 43%, which again, there's some lenders that will go up to 55%, 56% of that debt to income ratio. I've seen it. I've heard it. I've had conversations. I tell people, if the lender is telling you can go up to 57%, you need to, hey, I don't care. You need to run from the lender because you do not want to go that much up. You don't want to be that close to that debt, because if something should happen, how are you being able to physically still be able to save some money on the side? Because things happen, life occurs. And so you want to be able to pay, when things happen. For someone earning the median personal income of $45,000 a year, gross monthly income comes to $3,750 at a 43% debt to DTI threshold. That leaves about $1,613 a month for all recurring debt payments combined. A household earning the median income of $84,000 a year, meanwhile, would have $3,000 for monthly. So they're saying if you earn $45,000, you only got this left with that for that 43%. That's just really low. That's very tight. And even $3,000 a month nowadays is tight. How much these daggone gas bills and these daggone monthly. The gas bill is expensive. I looked at my gas bill the other day. I called the gas company. I'm like, what's going on? Because I'm like, I read the bill, but I never really like fully read the bill, and I need to smack myself for that because I like to read. And I'm like, what is this gas thing or whatever? Like charging like an extra 30. Like my gas bill, because I don't use a lot of gas, it's just me. So I'm like, I'm not using a lot of gas lately. I'm taking my shower. My stove is not gas, it's electric. Everything in my house is electric, besides, of course, the water heater, the gas water heater or whatever. And to get the hot water, I don't take 80 million showers a day. You know, I take typically one shower a day. I'll go work out, take my shower, go through the day, come home at night, maybe take another shower, and that's about all. And I'm not in the shower for like 2 hours, 3 hours. I wash my dishes, of course, because I don't have a I have a dishwasher. I don't use it though. I just wash my dishes, but I'm not, it's just me. So with that being the case, my gas bill, when I looked at the bill, the gas itself was only used $7 worth of gas. But my bill was like $56 because of all these other like gas fees, taxes, some gas structural pipe that they infrastructure or something that they charge you on. And I'm like, why is my gas? I'm like, this is crazy. But anyway, I'm going another tangent. Hey, what's going on, Rhonda? Hello, Clark and everyone. At those prices, it's cheaper to fix whatever is wrong to your car. It dag sure is cheaper to try to fix it nowadays, you know, because I told my dad, I said, after this car I had to go out and buy, I'm not buying another car. And if I do buy another car, it's going to be, I'm buying cash because I'm not buying another car. I'm sick of car payments. Typically, like I said, I'm not a fan of a bunch of debt. The car I had before that, as you guys know, I said I paid it off. The car I had before that, I got an accident. Somebody down here hit me again. For some reason, people like to hit my car down here or get me in accidents. So that car was totaled out. And because it was during the pandemic, it actually assessed for more than what I bought it for. So I was able to get a return. And then I had gap insurance for my car. So I tell people, of course, if you buy a car and you're able to get gap insurance, because you can't get gap insurance every time you buy a car if you put a certain amount down. So like the car that I have, the other car that I had, where I couldn't get gap insurance, and this car I couldn't get gap insurance either, because a certain ratio amount that you put down, you can't get it. As far as when you put down money to get the cars. But if you can get the gap insurance, it was great because it paid the difference. But at that time, because that car was worth more money, I didn't have to use my gap insurance. So I actually went and I got a refund, because I was like, well, I've been paying, I want my gap insurance back, so that I paid. So I went to the car dealership and they gave me my gap insurance back. So I got that money back too. But yeah. It says it's easy to see how a large car payment can eat up a significant share of a person's DTI. The typical $770 a month monthly new car payment would account for almost a half of a single person's allowable DTI, leaving little room for a mortgage. And it kind of goes more and more about that. It says the $135,000 cost of $770 car payment for home buyers, but few buyers think in terms of DTI. More often, they're thinking about how much can they afford. And this is another mindset that we got to switch. I have, for like the last couple of years, I literally have shifted my financial mindset in America, and my consumerism mindset. Because America is a capitalist country, but it's also a marketing country. This country is about marketing to us. They want us to buy. That's why you have so many billboards around. That's why you have so many commercials. Like even when I'm watching YouTube, before YouTube was a platform that wasn't so consumed with so many daggone commercials, and now it's commercials every 2 seconds. The goal is that I need to put my product in front of you to sell it to you so you can buy it, so then I can make money. And we're still and you as a person, you're still engaging in capitalism too. However, it's in a different sense of you purchasing, but not, gaining anything from it outside of the company gaining something from the purchase and sales. But so I've been like really reworking my mindset, adjusting my mindset. I actually bought a book too. I don't know where it's at. I don't know. I'll be buying these financial books. I'm gonna show y'all real quick. I'll be buying these books, and I started reading this book. I actually got it from Five Below. Let me grab it real quick. Give me 1 second. Sorry about that. So I bought this book from Five Below. No, let me put the receipt. I got the receipt as my bookmarker, but it got the location on here. I'm like, I can't have everybody figuring out where I live at. Well, y'all know the county I live in. Y'all know I'm in Georgia. But so this book is called, I don't know if you can see it. Ooh, it's hard to see. It's called Financial Freedom Workbook. Financial Recovery. Sorry. workbook. So it's like a workbook for like, it says freedom, confidence, security, relief, a step-by-step plan for regaining control of your money and your life during and after a personal financial crisis. So I haven't had a personal financial crisis yet, but because I'm not where I want to be financially, just to be very transparent with you guys, I always find that I always look at financial stuff, read financial reports, get books about finances and everything. So yeah, because they don't teach us about that in school system, and I don't want to say not in America. It's probably like globally around the world. They don't teach us about our finances and how to actually go on. They set us up in schools to become employees. They don't set us up in schools to financially know how to create independence and be well off as far as no debt. And I'm not saying well off as far as a bunch of money, right? Because you can make $30,000, $40,000 a year, but if you don't have no debt, you're still living a great, well-off life, right? Compared to somebody that's making 6 figures a year, but they have more than 6 figures worth of debt. So I'll be in my financial books. So if you ever call me or send me emails, because I know I get some emails and some texts sometimes from people, from offline, and I'm always great at answering people back. But if sometimes if I don't answer you right away, it's probably because I'm reading my book, but I will get to you. It says that's where the effect of a car payment becomes easier to see, assuming medium incomes across buyer profiles at 10% down payment and a standard mortgage scenario with 43% DTI. Limited car payments can cut some house hunters' buying power nearly in half. So it shows you like how car payments are shrinking buyers' home searches. So it says buying power of a single buyer, one car. So it says with the car is 148,000. That's how much they would qualify for. Without a car of $770 a month, they would qualify for 284. Medium income household with one car, it says 530,000. I don't know how they're creating these stats, but because I'm like medium income household, where are we at with this medium income household? And what is the medium income of this particular person? But anyways, comparing the difference between those different scenarios, and I don't want to get too much into it because I don't know where these stats are coming from. It's especially important consideration in today's market. While prices have cooled in some areas, the national medium listing price is still about $425,000. And as you guys see, you see how the listing prices depend on what article we read. They change. We had one, and it's kind of similar. We had one that said 424,000. Now we got 425,000. So that's one thing too. If you guys listen to different networks or read different articles, you'll see how the price, medium home price changes or fluctuates like either up or down a little bit. So that's why I tell people, and this is not even all the data, right? So it could be lesser, it could be higher, as far as the medium price, because a lot of this stuff is not on here because there are also new constructions that they are not putting in our MLS to try to track some of this data. So, and because they're not putting that new construction in the MLS, some of them too are not even getting the COs at the county. So the county don't even know that some of these units are even built yet, because some of these builders, what they're doing is that they're not applying for those COs because they don't want to have to start paying the taxes on the structure of that building. So they're like, oh, even though we have these, built, and we're just going to act like it's not fully built because we don't want to get taxed upon for the structure. So some of this stuff is off as far as different things. For the medium income household, just one typical new car payment could push the home out of reach. With 770 payment, their estimate ceiling falls from roughly 530,000 to 394, a drop of 26%. So this just kind of goes on and on as far as you being squeezed out of a home due to your car payment. And like Rhonda said, at this point, you might as well just try to fix the car. If you try to fix the car, especially if you don't have a car note. Try to fix the car, and then like Alex say, hey, what's the point of what's the point of worrying about that? Just live in the car, because there are people living in the car. If that's okay with you and you're fine with living in a car, then I can't knock your hustle. All right, so another thing I want to touch on real quick, and then I'm going to also show Alex this stuff in the MLS. Is that Trump says landmark housing bill is fine, and hence he will not veto it. So as everybody know, the housing bill had just recently passed. Again, I'm not a fan of the total housing bill. There are some things in there that I'm on board for, but then there's a lot of stuff in there that I'm not, on board for per se. Alex said, "Yeah, I know it was a joke, Alex. I know it was a joke." He said it was a joke. But hey, there are people who are okay with living in their cars, like so. And there are people that live in, RVs and station wagons and campers. So hey, that's why I was like, I don't want to knock their hustle. So if anyone comes across this, I don't want them to feel like, even though it's a joke, I don't want people, to be sensitive about it. But I knew it was a joke for you. He said, "Sorry for being a troll." It's okay. It's okay. I'm like, I don't want people to beat me up because they might feel like I don't want them to think I'm insensitive. But I knew it was a joke, though. I know that it was a joke. Hey, what's going on, Lang? So yeah, so as far as the housing bill, as we know, the housing bill had passed. There are different things in the housing bill, and people were saying that Trump decided not to sign the bill. However, they said it was veto proof, that even if he didn't veto it, it would still pass. At this point, Trump is like, I'm fine with it. It is what it is. So it says President Donald Trump has reiterated his preference for a voting ID bill over the landmark housing bill on his desk, while hinting that he will not use a veto to block the housing package. The president refused to say whether he would sign the landmark 21st Road to Housing Act after he abruptly canceled signing it, but he softened on the actual bill while stating that he wanted to see Congress take action on the voter ID bill, the Save America Act. The housing bill is fine, Trump told CNBC on Thursday. There's a lot of Democratic points in there, and I don't think they're good, but it's fine. But I made the case I'd rather not sign anything until we sign the Save America Act bill. So at this point, he said he don't want to sign nothing until they sign his bill, that particular bill. I don't know the full landscape of the Save American Act bill, but at this point, I'm just like, like I said before on these lives, I'm a fan of making sure we break these bills down to one bill and not a bunch of bills and a big bill. Like, because those bills are like 800, 1,000 pages, and most people, let's be honest, we're not reading those bills. And it, so because of that, we're getting stuff thrown in on top of other stuff that might slide underneath the radar, that's not really good for the American people. But people, they keep having media focus on one particular thing. Like right now, as far as the 21st Century Housing Act bill, they're like, oh, institutional investors. And they're not seeing other things that outline that bill too, that are like inside that bill as well, that are some other things in there. I'm like, I don't think this is going to be good for the housing market, for housing in general, for Americans. And so in the institutional investor part too, at the end of the day, it doesn't affect every state, every locale. It doesn't affect everybody. So like in Metro Atlanta, yes, it affects us 25%. At one time, it's 30%, but 25% of the Metro was bought by institutional investors. And then certain counties had a bigger pocket of those investors that bought. Like, I think Henry County was like one that had a lot of investors that bought, institutional investors that bought down there. But now in this era, a lot of them are becoming net sellers. They're liquidating their properties. They're reorganizing their portfolios. And because of that, they're actually, unfortunately, causing equity in homes to go down in some of these developments in some of these areas. So I don't know, again, I said America is good at marketing. We're a marketing country. I believe not signing is called a pocket veto. Okay. So what's it? A pocket veto is basically saying, what does that mean? Let me look up, see what a pocket veto means, because I don't know what a pocket veto is. See, that's why I love having these conversations on YouTube, because then I can understand more. A pocket veto is a legislative maneuver that allows a president or a governor to kill a bill by taking no action rather than formally vetoing it. Okay. So basically, it says when a bill is passed by a legislator and presented to the chief executive, such as President of the United States, the executor typically has 10 days, excluding Sundays, to sign the bill into law or veto it. If in this session, if the executive takes no action and Congress remains in session, the bill automatically becomes law after 10 days. If Congress adjourns within the 10-day period, prevents the blah, 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 blah. Okay. Unlike a regular veto, which can be overridden by 2/3 vote and blah, 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 blah. Okay, so see, I learned something today. I always learn everything. Every time I come on these lives with you guys and have this conversation, I learn. Thank you, Alex. I never knew it was called a pocket veto. Rhonda said they're putting so many people out, there won't be people left to buy houses. Yeah, they're putting so many people, like you said, they're putting so many people out that And it's in so many ways too, as far as how they're keeping people out of housing, right? You have people can't get housing because, again, if you want to go the route of a condo, like back in the day, people would buy condos. And even though there's been a lot happening in the condo market or people buying townhouses, they were able to afford it because HOAs weren't as expensive, right? So that's the way. HOAs are overly priced now because of, the buildings having to be repaired and all these different things have to happen, the special assessments, blah, blah, blah. And so that's a form of keeping people out, right? Certain people can't afford a house with the HOA. Then you have houses that are unaffordable, keeping people out, right? So so many different avenues that they're keeping people out. So I understand. He said the executor is the president. Okay, all right. So we'll see. All right. It says we read that part already. Let's see. It says as long as Trump does not use his veto power, the housing bill will automatically become law by July 10th. And we are past. We're not past July 10th. I said we're past. I'm rushing time, right? Which will make 10 days since House Speaker Mike Johnson officially submitted it into the Oval Office. However, even a veto could be overturned by the super majorities that backed the bill in the House and the Senate, making eventual passage likely. It says the House passed the bill 3358. As we know, we kind of read all that, so I don't want to reread it because we talked about last thing. So as we got, like I said, it talks about the institutional investors, new banking rules, permitting like the aim of mortgage lending, measures to cut red tape for and speed up home building. And this is a thing that I have a problem with too, a little bit of this. Like I understand the whole like cutting the red tape as far as building homes and stuff, but we're already seeing a whole situation where these builders are not building effective homes nowadays. So now to to actually cut some more red tape and allow for building to speed up, these houses are going to be falling over when the wind blows. It's going to be like bloop, like a cardboard box, like the Three Little Pigs. But to each his own. And then that kind of goes into more. It talks about the bill, so we already read some of the bill last thing, so I don't want to put you guys to sleep with the bill again. And then I'm going to show real quick. I'm going to show Alex this in the MLS real quick, and then I'm going to talk a little bit about. I'm not in New York, but it's as you guys know, Mayor Mandani, if I'm saying it right, he passed the rent stabilized situation in New York, and there's been some pushback against certain things, and but I'm not in New York, so I'm not fully going to be able to go into that whole topic, but we're going to see what a gentleman named Kenny Burgos is saying about rent stabilization. Sorry, 1 second. I want to show Alex this in regards to if the brokerage you're working with, the transaction brokerage you're working with, I don't know if they have access to the FMLS because everybody doesn't. But if they do, but again, you're not in the middle of Georgia, but I'm just showing you like different ways. And so other people might, if you have a realtor and you're working with them in the Metro Atlanta area and you want to be in other people's MLS's business, because I'll be in people's MLS business. So as you guys see right here, there's some MLSs that we have access to through the FMLS in Georgia. So Central New Jersey MLS, the Bright MLS, the Mid-Atlantic, the Heartland MLS, and Greater Kansas City. I don't know if you guys can see that. I don't know. Let me go a little bit bigger. And so I'm being these people's MLS, just being nosy. Miami MLS and Northwestern, which is Florida, Northwestern MLS and Greater Seattle, Omni MLS, Central and South America. So I'm always in this MLS because I told myself that I do want to possibly move to Central America one day. So I'll just be in there looking at Costa Rica, Belize, and all these places. I'll just be being nosy. Pikes and Peak MLS, Colorado, Real Comp MLS, Detroit and Southeast Michigan, Colorado, which is the Greater Denver. We got Western Arizona, we got Williamsburg, Virginia, and Rhode Island right now. And then also, if we go through residential this way, we have access to these other MLSs. So we have Gulf Coast, which is in Alabama. We have Eastern Alabama Board. Mid Georgia. So like I said, this is one like middle of Georgia that I'll go into sometimes where realtors that are like in Warner Robins, Macon, Perry, so those areas down here sometimes will put their listings in middle of Georgia and they won't put in like the FMLS, they won't put in the GMLS. And like I said, sometimes they'll put them in the Central MLS. I don't have access directly to Central MLS, but I'll just call the realtor up. We have California, we have Tennessee, Alabama again, and Texas and things like that. So these are other MLSs as well outside of the FMLS. And every time you turn around FMLS and GMLS, they're starting to create more combining of the MLSs. So if you ever have a realtor in the FMLS, and you know, ask them what MLSs do they have additional access to. So that's a little hint for you guys. Alex said Ditto is GMLS, not FMLS. Yeah, I remember you said Ditto was in GMLS. I just wanted to show everybody that the different accessibilities we have as far as the MLSs if you have a realtor. Let me see. I'm gonna see if I can find the Ditto, do the Ditto real quick. Excuse me for my computer. And then you said GMLS and FMLS are competitors. Yes, they are two different MLSs. Yep. So this is what you're talking about. You're talking about the Ditto right here. Ooh, I'm trying to share my screen. Right here, Ditto. When I click on it, it goes into a different one. Oh, Lord. Sorry, my screen froze, so I have to wait for it's buffering on my end. Of course, when I clicked on it, I don't know. I hate when it does this. Let me stop sharing. It might end up kicking me out, but let me see. Give me 1 second. We're playing around in MLS real quick, and we're going to get to this Kenny Burgos, which is so funny because people don't know this, but my grandma's last name is Burgos. So then Ditto, you said Ditto allows you to copy a listing from one MLS and insert it into another MLS, another with a few edits possible. Then it says, where do you want to send your listing at? And then you can put GMLS, FMLS. So this is what I'm guessing your transaction brokerage did, is they did it and they copied it and they send it to the GMLS. And they might be able to do, like I said, they might be able to send it to the FMLS, but the FMLS wouldn't make no sense in your particular area just because most people in your area, typically FMLS is more Metro Atlanta. So, but yeah, but definitely talk to your transaction brokerage and, you know, see how they can play around with it and do different things. But this is what it looks like inside our system. Let me see if I click GMLS real quick. Is it still on the same screen so you can see? So I'm just playing with it so Alex can see this, you guys. It says, where do you want to get the listing? And then it shows you right here, start from scratch, or you can grab the listing from these other places to put it into the GMLS. So you can grab it from that, FMLS, these different MLSs, Columbus. So these are the MLSs in Georgia. It's not all of them now, some of them. So that's the thing. It only gives you accessibility to a certain amount of MLSs. So it's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18. So it gives you accessibility to 18 MLSs. And like I said, in the state of Georgia, we have 59, I believe. Let me just double check because I keep telling y'all how many MLS in Georgia. I believe it's 59. There are, before I start telling y'all, of course, we know there's 159 counties, but how many MLSs are there? This is talking about, I guess, because we're talking about GMLS and FMLS. So now it's just showing me FMLS and GMLS. How many MLSs are in Georgia? But they have been recently, they have been kind of, what you calling them? Was it consolidating the MLSs? So it's saying 12, but that's not correct. But it's saying 12, that's incorrect. But anyway, let's go here real quick. And so I would say, yeah, okay. You're saying that y'all related. Who, me and what, Kenny and myself? I don't know. We might be. I don't know. Click South Georgia. All right, I'll click South Georgia for you. I don't know, Rhonda. And so right here it says by listing number, by address, by blank. So basically, I would have to copy this from the MLS. I don't have a listing that I'm copying right now, but so it says search the Georgia MLS for the listing you want to copy into the MLS. So basically, you're copying it from the South Georgia MLS into the MLS. So you would need the listing number, you might need the address, or you need to start a blank form, and then you keep going from there. So I don't have any of those things, so I can't go beyond this point. But this is just some of what the Ditto program looks like. He said 25 MLS. Okay, 25. All right. So 25 MLSs in Georgia. So I apologize, you guys. I said 59. I don't know where I got 59 from. Understood things. No problem, Alex. No problem. All right. So let's look at Kenny Burgos real quick about this housing. As I said, the housing situation. This is a video on TikTok. Let me know your thoughts if you're in New York and you're watching it.
Hundreds of thousands of apartments are at risk right now.
So let's click here.
And if you're looking for an apartment,
this is the only thing about.
And at the heart of all this is who? The tenants. Is people going to live in subpar housing? When you talk about the rent freeze, the density of rent stabilized housing is in the Bronx, is in Washington Heights. Families that built this city. They've been living at 30, 40 years. Mero, I'm sure you got family in Washington Heights.
Come on. Sherman Ave, what up? Familia, what up?
But when their rents are just below the operating costs, when the city makes it more expensive on property taxes, water, labor, insurance, you name it, they're squeezing the operation. That shows up as the tenant experience. So yeah, they can sell the building, but who's still there? And at the heart of all this is who? The tenants. Is people going to live in subpar housing? When you talk about the rent freeze, the density of rent stabilized housing is in the Bronx, is in Washington Heights. Families that built this city. They've been living at 30, 40 years. Mero, I'm sure you got family in Washington Heights.
Come on. Sherman Ave, what up? Familia, what up?
But when their rents are just below the operating costs, when the city makes it more expensive on property taxes, water, labor, insurance, you name it, they're squeezing the operation. That shows up as the tenant experience. So yeah, they can sell the building, but who's still there? And at the heart of all this is who? The tenants. Is people going to live in subpar housing? When you talk about the rent freeze, the density of rent stabilized housing is in.
So basically what he's saying, so, okay, Alex said 159 counties. Okay. So that's probably where I'm getting the 59 from. Thank you, Alex. So in regards to the housing situation, again, I'm not in New York. So if anyone is in New York and they jump on this live and check this out, let me know how you feel about this. So what he is saying, Kenny Burgos, I believe he is the, what is he? Something that has to do with like tenant, with landlord, something in New York code on. Let's see if Kenny Burgos is. So you guys can know who he is, Burgos or Burgos. I forget. It's a certain way that you say the name. I'm saying it wrong. So he used to be he's a Democrat. He used to be he represented the 85th district of New York State as an assemblyman. He's from the Bronx, New York, and he currently is the CEO of the New York Apartment Association of Housing. And so he's been on the same track as far as Mayor Mamdani, if I'm saying it right, Lord Jesus, in regards to like a lot of the same political issues as far as in the city of New York. However, when it comes to the rent freeze, he's not very comfortable in the rent freeze because he feels like if they freeze the rents, what will end up happening is that most of these landlords won't be able to pay for the taxes that are on the building, pay for any things that might need to get fixed in the future because they're only limited to so much money they can make. And as prices go up in order for repairs and taxes and different things like that, they're now not making that. So they're going to offset it by not doing anything at all. And so he's saying basically what will happen is that the tenants that are in these rent freeze buildings, they will be the ones kind of taking the brunt of it, living in more dilapidated buildings that are not being, fixed up, repaired, because that landlord who owns the building won't be able to afford it due to the prices being freezed. However, we all know, just like most of the country, is that rents are going up. It's becoming more unaffordable. And because incomes are not keeping up with the amount of prices of home ownership or renting, people are constantly struggling to be able to sustain shelter. And so it's a catch-22. I don't know how you guys feel about this. Like I said, I'm not in New York City. I'm not experiencing this, but this has always been a conversation, even when they tried to create rent freezes in different locales or different other major cities where they're like, oh, we don't want to have a rent freeze because it could lead to other things outside of just the tenants being able to stabilize and be able to afford something. And then we also have rent caps and low incomes and all those different things, like different ways of how they create different structures of the rents in America in certain cities and places. But New York City is a very, very expensive place to be. I used to live in New York City, in Harlem, and also in the South Bronx. And I understand, and that's the reason why I didn't stay in New York City, because I don't want to live on top of people. I don't want to live the rest of my life, to be on top of a person and pay $2,000 worth of rent or more, right, for a studio or a corner in a house. And so because of that, I decided to exit out of New York a long time ago because I was like, I want to be able to actually have something to live in, have grass, have different things, right? So, and I'm not saying you can't get grass in New York, because you can. If you go upstate New York, you can get grass in certain areas, in certain boroughs, you can get grass, right? You can get a little bit of grass in the Queens, the Bronx, Brooklyn, wherever you're at, right? But yeah, so I don't know if anybody's watching this now or watching this later on, give me your thoughts. Let me know as far as how you feel in regards to the rent freeze and what's happening. And of course, if it affects you and you're barely making it day to day, to try to make it American living, per se, and create that American dream, to stay in New York and thrive in New York. I understand that this is great for you, right? But he's talking about the effects that it could have on the latter end of it if the rent is frozen. But then also he's saying too, as far as it could push up prices in other buildings, because the people that have the rent freeze are never going to move. So now you don't have housing that's going to come back on the market, and it can cause more of a shortage in housing, especially if they're not building at the capacity because it's too expensive to build in like New York City. So I guess it's different as a domino game, right? It's different effects that happen. Like, we want to make sure people are supported, taken care of, able to afford to live and not have to work 30 million jobs to sustain a lifestyle, or just to create a living in America, which I don't particularly like. I don't feel like we need to work 30 million jobs, and I'm exaggerating with this, right? But I don't feel like a person needs to work 5 or 6, 7, 8 jobs in order to sustain a life. I feel like it should be one job, and it should be able to sustain life. If you want to live a more lavish lifestyle, then yeah, get more jobs, do so, right? Create other ways of creating that lifestyle. However, I feel like a person should be able to afford a typical lifestyle, an average lifestyle, on one paycheck from one job. That's just my thought. Everybody has their own thoughts. Hey, what's going on, Croy Clark? How are you? I'm sorry I'm late. Love your show. That's no problem. It's okay to be late. I understand we have a lot of stuff going on. But again, to everybody, happy belated 4th of July if you celebrate the holiday. And I appreciate you being here. I'm doing good. I can't complain. Hopefully you are doing well. And Florida is holding up down there for you. And I know you asked me a question the other day on my last live about the condo situation, everything, and the ARM as far as what you're looking to explore. So I don't know if I answered your question or if it helped, but let me know how you were feeling. Because I was even thinking about the whole thing too a couple of days later after you say you were looking to explore that ARM option for a possible loan product. And I'm like, well, if you were going to refinance in that 4-year mark before that ARM is up, then what's holding you back from doing a typical 30-year where you lock in, and then if you need to refinance, you can later on. I don't know, talk to your lender. Maybe they told you something as far as origination fees and everything is cheaper, blah, blah. But typically if you use FHA, sometimes when you refi, you can do a streamline refi. And they typically don't charge you the same amount they charge you with that standard refi. But I'm not a fool. I'm not a lender in totality. So you want to talk to a lender about those different options. But yeah, so let me know your thoughts as far as Kenny Burgos, how you guys are feeling about that in New York. And I will see you guys next Sunday, 7 p.m. Eastern time. I appreciate everybody being here with me tonight. Again, happy belated 4th of July if you celebrate the holiday. If you're new over here, don't forget to subscribe to the channel. We want to keep growing the channel. We want to keep having discussions amongst each other. We learn something every day. Today, Alex taught me something new in regards to the pocket veto, which is great. And every week I learn something great something great and new from you guys. So I appreciate everybody being here in a live chat. And if you did miss us and you have a question, and if I can be assistance or answer it, just put it below in the comments. You can also, email me. You can send me a text. It's up to you guys. I'll put my stuff up here real quick, and then I'm gonna get out of here so I don't keep you too long. Because sometimes I'll say I'm gonna put it in a comment in a section box below, and I get off this live and StreamYard, since I stream it through StreamYard, they'll put like their stuff down there, and then I have to go back like 3 or 4 days later, like, oh shoot, I forgot to put the information people want to reach out. So this is the 678-995-3170 is my office business line. So if you want to call me there, you can. Some people email me, and once they email me, I call them from my main line typically. So some people probably will get a call from my other line. So some people have my regular phone line, but this is my office line. But yeah, you can email me, you can call me on office line. I don't answer right away, I will get back to you. I promise. All right. Let me see real quick before we jump off of here. Let's see what Troy said. My score is not as high as I would like, so the arm was just a thought. Okay, I get what you're saying. I get what you're saying. All right. No problem. No problem. You should always, sometimes I tell people it's okay to, excuse me, to talk to a lender to see if they can create a path for you in regards to getting your score to where you want to be at. They can kind of structure how you can pay things off, adjust things here, blah, 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 blah. So, and I know everybody don't want to always go to a lender or whatever because they feel like they're going to sell them. If you feel like that lender is trying to sell you into getting a home, then you go to another lender, right? You just let them know, hey, I'm just coming here because I just want to create a pathway to help me. How can I get my score to be higher? What can I pay off? I'm not looking to buy right now, but in, let's say 5-6 years, I want to possibly purchase something. But I just need a pathway to get to that goal. So, and if they're willing to do that for you, typically that's a good, a good lender. But if someone's like, oh, I can get you going in a year or whatever, you're like, well, I told you I want to wait 5 to 6 years, then that's a pushy salesperson. And at the end of the day, we all got to be mindful that this is a sales business and people are trying to sell you, right? So don't get sold unless you want to get sold, right? So Lang said, have a great week. Stay hydrated. And thank you, Devon, for sharing your knowledge. No problem. No problem. I appreciate you guys being here. Yes, I will come out with a video in regards to Georgia Dream program. It's a short, it's going to be basically, it's going to be called, make sure if you're doing down payment assistance to read all the terms in the down payment assistance program. Georgia Dream is a down payment assistance program located for Georgia. That's why it's called Georgia Dream. A lot of people utilize it. However, you used to have to pay the down payment back that you borrow from the loan, whether you sell, refinance, or turn it into investment property. But also there's another tax in it that I'm going to talk about on the short that I have. It's called a recapture tax. And that also could apply in certain circumstances if you decide to sell your house within a 9-year period. So once I get enough energy to go and shoot that short video, I will put it up on my YouTube page as well. So again, I appreciate you guys being here. I will see you guys next Sunday, 7 p.m. Eastern time. Take care. Have a wonderful Sunday. Be blessed and stay safe, you guys. All right. Bye-bye.